If you receive Social Security, I want you to pay very close attention to what I'm about to tell you, because a new 2027 COLA estimate could mean a noticeably bigger check next year. We're talking about a projected 3.8% increase. And for someone receiving an average Social Security retirement benefit, that could mean roughly $79 more per month. But here's the part one don't want you to miss. That $79 does not necessarily mean $79 more in your pocket. Medicare premiums could take part of that increase right back out. And there's something else happening right now that could determine whether that 3.8% estimate stays where it is, moves higher, or falls before the official number is announced. So today, we're going to break down exactly what this new estimate means, how the Social Security COLA is actually calculated, why the next few inflation reports matter so much, and what you should and should not do with your money right now. Because if you're retired, every dollar matters. And when you're living on a fixed income, even a $50, $70, or $100 difference every month can add up to hundreds or even more than $1,000 over the course of a year. So let's get straight into the number everyone is watching. The latest estimate for the 2027 Social Security COLA is 3.8%. That's the projection we need to pay attention to right now. And when you compare that with the 2.8% COLA for 2026, you're looking at a full percentage point difference. That may not sound huge when you hear it as a percentage, but let's put it into actual dollars. Suppose your current monthly Social Security benefit is around $2,000. A 3.8% increase would be approximately $76 more per month. If your benefit is around $2,100, you're looking at roughly $80 more per month. And if you're receiving more than that, your potential increase would naturally be larger. Now here's where things get interesting. The reference estimate puts the average retirement benefit around the low $2,000 range, meaning a 3.8% COLA could translate into something around $79 more per month for an average beneficiary. Over 12 months, that's close to $950 more in annual Social Security benefits. That's not pocket change. For a retiree, that could help cover groceries, a utility bill, prescription costs, gas, or simply give you a little more breathing room when an unexpected expense appears. But before you start planning what you're going to do with that extra money, there's a very important warning. The 3.8% number is not official yet. And this is one of the biggest mistakes people make when they see early COLA headlines. They see a percentage, they multiply it by their benefit, and they immediately start treating that number like guaranteed income. Don't do that yet. The final 2027 COLA depends on inflation data from a very specific period, and those numbers haven't all been finalized. This is where the next few months become extremely important. Social Security doesn't simply look at one inflation report and decide your COLA. The calculation uses a specific inflation measure called the Consumer Price Index for urban wage earners and clerical workers, commonly known as CPIW. And the critical part is this. The calculation focuses on the third quarter, July, August, and September. Those 3 months are incredibly important because the inflation data during that period is what ultimately determines the official adjustment. Think about what that means. We're not looking at a number that's completely locked in. We're watching a number that can still move. If inflation comes in hotter than expected, the eventual COLA could potentially move higher. If inflation cools more than expected, the final COLA could come in lower. And that's why you should be extremely careful when you see headlines claiming that the 2027 COLA is already guaranteed. It isn't. Right now, 3.8% is an estimate. The official number comes later. And that distinction could mean hundreds of dollars over the course of a year. Now let me explain something else that many Social Security recipients don't realize. You may hear the regular CPI inflation number on television. You may hear commentators talking about inflation going up or down. But the number used for Social Security COLA calculations is not simply whatever inflation figure you heard on the evening news. The COLA formula uses CPIW, and that creates an interesting problem. CPIW is designed around the spending patterns of urban wage earners and clerical workers. But retirees aren't necessarily spending their money the same way younger working households do. Think about your own budget. What takes up a large portion of your monthly expenses? Housing, food, utilities, insurance, medical care, prescription drugs. Those expenses can feel dramatically different from what a younger working household spends money on. And healthcare is especially important. For many seniors, medical costs can consume a substantial portion of their monthly income. So even when the official COLA looks reasonable on paper, it doesn't necessarily mean your personal cost of living has increased by exactly the same amount. That's why a 3.8% COLA can sound great when you hear it in a headline, but feel much smaller when you actually sit down at the kitchen table and compare your bills. And that brings us to the most important question. What does 3.8% actually mean for your check? Let's make this simple. Take your current monthly Social Security benefit. Multiply it by 0.038. That gives you a rough estimate of what a 3.8% increase would add before considering other changes. For example, if you're receiving $1,500 a month, 3.8% would be approximately $57 more. At $1,800, you're looking at around $68 more. At $2,000, roughly $76 more. At $2,500, approximately $95 more. And at $3,000, around $114 more. Now pause for a second. If you're receiving $2,000 a month, that sounds like a $912 increase over an entire year. But remember, that's based on the projection. And it also doesn't tell us what happens with Medicare. This is where a lot of Social Security videos stop. They tell you, you're getting $79 more. And they make it sound like that entire amount is going straight into your bank account. But that's not necessarily how it works. If you're enrolled in Medicare Part B and your premium is deducted directly from your Social Security benefit, any increase in your Medicare premium can reduce the amount of your COLA that you actually feel. So imagine your Social Security benefit goes up. You look at the new number and think, great, I'm getting another $79. Then Medicare costs increase. Suddenly, the actual improvement in your monthly cash flow is smaller. That's why I want you to remember one phrase. Gross COLA is not the same as your net increase. The percentage is one thing. Your actual monthly deposit is another. And that's the number that matters when you're sitting down to pay the electric bill. Now here's another important point. We still don't know the final 2027 Medicare Part B premium at this stage. So don't let anyone tell you today exactly how much of your COLA you're going to keep unless they're clearly labeling it as an estimate. The Medicare number will matter. And when those figures become available, you'll want to look at them together. Social Security increase on one side, Medicare deductions on the other. Then you can calculate what actually reaches you. And there is another reason I'm telling you not to spend this money yet. The 3.8% estimate could still change. Remember those 3 months we talked about? July, August, September. We're watching the inflation numbers during that window. So the next inflation reports are going to be extremely important. This is where I would encourage you to ignore the sensational headlines. You're going to see titles saying, COLA soars, COLA collapses, seniors get huge raise, Social Security increase guaranteed. Be careful. Until the official calculation is completed, those headlines are designed to get your attention. The responsible thing to do is watch the underlying data. And right now, the estimate we're discussing is 3.8%. That is meaningful, but it is not guaranteed. Now let's take a step back and talk about why COLA exists in the first place. Because this is something people sometimes misunderstand. A COLA isn't really a bonus. It isn't a reward. And it isn't designed to make you richer. The purpose is to help Social Security benefits keep pace with inflation. If prices rise, your purchasing power can fall. Imagine you were able to buy 10 bags of groceries with your monthly benefit several years ago. If those same groceries become significantly more expensive, your Social Security check might buy fewer things. COLA is intended to help compensate for that loss. That's why I want you to think about a 3.8% increase differently. Don't think, I'm getting 3.8% richer. Think, Social Security is attempting to adjust my benefit because the cost of maintaining my lifestyle has changed. That's a completely different way of looking at it. And it explains why a COLA can be both good news and frustrating news at the same time. A higher COLA means your check may rise, but it also tells us that prices have risen enough to require that adjustment. So the real question isn't simply, how big is my raise? The better question is, how much purchasing power will my new benefit actually give me? And that brings us to something else you should be watching very carefully. Interest rates. The Federal Reserve's decisions don't directly determine your Social Security COLA, but interest rates and inflation are connected parts of the broader economic picture. When inflation remains persistent, The Federal Reserve has to think carefully about how quickly it can lower interest rates. And that matters to retirees in different ways. If you have money sitting in savings or certain short-term investments, higher interest rates may provide an opportunity to earn more interest. But if you're carrying credit card debt or other variable rate debt, higher rates can be painful. That's why anyone living on a fixed income should pay close attention to debt. A higher Social Security check won't help much if high-interest debt is consuming the increase. Let's say your Social Security benefit rises by $80, but you're paying hundreds of dollars in interest on credit cards. The bigger check isn't solving the underlying problem. That's why the smartest approach isn't simply to wait for COLA and hope it solves everything. Use the information to plan. And here's something you can do right now. Take your current monthly Social Security benefit. Write it down. Then calculate 3 possible scenarios. A lower COLA, the current 3.8% estimate, and a slightly higher COLA. You don't need complicated software. You don't need an expensive financial calculator. Just understand what each scenario would mean for your household. If your current check is $2,000, for example, a 3.8% increase is roughly $76. If you multiply that by 12 months, you're looking at roughly $912 over a year. Now ask yourself, where would that money actually go? Groceries? Utilities? Healthcare? Debt? Emergency savings? That simple exercise can make the COLA discussion much more practical. And here's something else I strongly recommend. Don't increase your monthly spending based on an estimate. This is extremely important. If you're currently receiving $2,000 a month, don't start budgeting as if you're definitely going to receive $2,076 next year. Wait, let the official number arrive. Then check the Medicare premium. Then calculate your actual net increase. Only after that should you adjust your monthly budget. Because a projected increase is not the same thing as guaranteed money. And if you're already retired, that's especially important. You don't want to make a permanent spending decision based on a temporary estimate. Now, if you're not currently collecting Social Security, you might be wondering, why should I care about the 2027 COLA? You should care because COLA is part of the long-term retirement picture. If you're planning to claim Social Security years from now, inflation assumptions can affect your retirement projections. But there's a trap here too. Don't assume that Social Security will increase by exactly 3.8% every single year forever. That would be an overly simplistic assumption. Some years have higher COLAs. Some years have lower ones. And in some years, inflation can be extremely low. So if you're building a retirement plan, conservative assumptions can be safer than assuming unusually high annual increases. The goal isn't to predict the future perfectly. The goal is to build a plan that can survive if the future doesn't go exactly the way you expect. And that's one of the biggest lessons from this entire COLA story. Don't plan your retirement around one number. Build flexibility. Keep track of your expenses. Understand your Medicare costs. Watch your debt. And know where your Social Security income fits into the bigger picture. Now let's bring everything together. Right now, the 2027 Social Security COLA estimate we're discussing is 3.8%. For someone receiving around $2,000 per month, that's roughly $76 more per month. For an average benefit in the range discussed by the reference estimate, that could be around $79 more per month. But again, that is an estimate. The final number depends on the official inflation calculation using the relevant CPIW data from July, August, and September. So the next few inflation reports matter. And once the final calculation is complete, the Social Security Administration will announce the official COLA. That's when we will know the real number. And then we have Medicare. Your gross Social Security increase isn't necessarily the same as the amount you'll actually feel in your bank account. Medicare premiums can reduce your net increase. So when the official numbers arrive, don't just look at the COLA percentage. Look at the entire picture. Social Security benefit, Medicare deductions, prescription costs, utilities, food, insurance, and your personal monthly expenses. Because that's your real cost of living. Not a headline, not a percentage, your actual life. And I want to leave you with one final thought. If you're receiving Social Security today, you've spent years working, paying taxes, contributing to the system, and building the life you have now. You deserve to understand exactly what's happening with your benefits. You don't need fear. You don't need panic. And you don't need to believe every dramatic headline that appears on your screen. You need accurate information and a plan. Right now, The 3.8% estimate is encouraging, especially compared with the 2.8% COLA for 2026. But we're not at the finish line yet. The next inflation reports matter. The final calculation matters. Medicare matters. And your personal budget matters most of all. So don't spend the increase before it's official. Don't assume the estimate is guaranteed. And don't forget that what really matters is not the headline COLA, but the amount of purchasing power you actually have after all of your expenses. If this update helped you understand what the 2027 Social Security COLA could mean for your wallet, make sure you subscribe and turn on notifications. And tell me in the comments, what would a 3.8% COLA mean for your monthly budget? Would that extra money go toward groceries, Medicare, utilities, debt, or savings? Your answer could help someone else watching this video realize they're not the only one trying to make every dollar stretch. Stay informed, stay prepared, and I'll see you in the next update. There is absolutely nothing wrong with asking a tax professional to explain something before you make a financial decision. In fact, that's often the smarter move. Because the goal isn't to react faster. The goal is to react correctly. And that's the biggest lesson from this entire $600 IRS limit story. Don't confuse urgency with importance. Something can sound urgent and still be misleading. Something can sound scary and still be completely misunderstood. And something can involve a real IRS rule without meaning what the headline says it means. So slow down, verify, then act. And if you're watching this because you're worried about your own retirement savings, I want you to hear this clearly. Don't be ashamed of having money saved. Don't be afraid of seeing a balance in your account. And don't let fear force you into an unnecessary financial decision. Your savings are supposed to provide security. They're supposed to help you handle unexpected expenses. They're supposed to give you options. The answer isn't to make yourself financially vulnerable because someone online told you there's a $600 limit that doesn't actually exist. Protect your money by understanding it. Protect your retirement by keeping records. And protect yourself from scams by refusing to act under pressure. So here's the bottom line. No general IRS rule says retirees must keep their checking account below $600. The $600 figure comes from tax reporting discussions and older rules that have been widely misunderstood. Current reporting rules can differ depending on the type of payment, transaction, and tax year. And that's why the exact details matter. Don't take a complicated tax rule and turn it into a simple bank account limit. That's not how the tax system works. And if someone tries to convince you otherwise, ask them to show you the exact rule. Not the headline, not the screenshot, not the social media post. The rule. Because when your retirement money is involved, you shouldn't be making decisions based on fear. You should be making them based on facts. And if this video helped you understand what this $600 IRS limit claim actually means, make sure you subscribe. We're going to keep breaking down confusing IRS, Social Security, retirement, and tax headlines so you can understand what matters and what doesn't. Hit the like button if you want more videos like this. And send this video to someone who may be worried about the $600 claim. Because they may be sitting at home right now wondering whether they need to move their money. And the best thing you can tell them is, stop. Don't panic. Verify the facts first. ***. Your retirement deserves that much. And remember, don't let a viral headline control your money. Stay informed. Stay cautious. And I'll see you in the next update.